Now, Sailesh Raj Bhan is Chief Investment Officer, Equity Investments at Nippon India Mutual Fund. Sailesh, great to have you with us here on the program. Good to have you back on the show as well. Prashant here. Sailesh, how are you do you think we're very close to previous all-time highs, about 4% in the Nifty, 2% in the Bank Nifty, but do you believe there is enough in the mix which leads you to believe that we are in for some bigger and larger, more meaningful moves from here beyond the next 2%? What's your sense?
See, directionally, we have seen a meaningful time correction in the last 18-19 months. That gives a lot of cushion in terms of, the excess froth in the markets not being there. Interestingly, in the same period, we had reasonably weak earnings in the last 2 or 3 quarters. And I think as earnings from here on start improving, because it's a journey still, earnings don't ramp up in 1 quarter. But I think directionally you would find earnings improving from here on, which plays out a lot in terms of how the markets are optimistically looking at the near term. More importantly, the international factors, if you look at, except for US, where the struggle still remains, I think the worst for Europe, the worst for China and all seems to be behind. And I think all this should support general stabilization and recovery in demand. India does depend a lot on global demand, and I think that will support our earning recovery as we get into in the next 2 to 4 quarters. And I think that's what markets are looking forward to.
All right. Hi, Sailesh. Good to hear your optimism on the earnings growth. But what are you factoring in? I missed that number because, many on the street believe that mid-teens for next 2 years, that's gettable, but that could be at risk. What are you factoring in?
Yeah, so if you look at it, the base, in the last 12 months now, earnings have been weak. At least 3-4 quarters have been fairly weak earnings after the COVID recovery and rebound which has happened. On this base, getting to 12-13% should be fairly comfortable, and the global growth remains good. I think it could play a little bit higher than what we are looking at. So I think earning uplift seems to be an important opportunity in the next 2 or 3 years, and I think that seems to be, at least the construct is right and ready for that. 12 months out, you would be possibly in a better global growth environment, which in a way would lead to better support to our exports, better support to our earning growth. So I think we would look towards maybe 12-13% kind of broader earning growth over the next 2 years, with some chances of acceleration if things remain normal.
So for example, this earnings season so far, Sailesh, right? After Q3, we saw lots of downgrades. Are you seeing that signs of, in management commentary, in portfolio companies, signs and hopefulness of earnings acceleration?
See, it's a little too early because, we have seen a few sectors disappointing, a few sectors doing okay, but these were in line with expectations. So banking was likely to do well, it's done well. IT services had to see some struggle and it was visible. I'm looking, say, 2-3 quarters out, 2 quarters out, when the base effect of last year's strong recovery also wanes out, right? So from where we stand, say last 2-3 quarters have been low single-digit kind of earning growth. From here on to accelerate to 12-13% is a doable task, maybe in the next 3-4 quarter period, and then accelerate further because the investment cycle would kick in, the stability in terms of global demand and recovery could pick in the next 3-4 quarters, and that will support taking the current high single-digit earnings to the early double-digit level. If in terms of commentary, I think there is no increased pessimism. I think in some pockets there has been recovery in March and April. In some pockets there has been deterioration. I think it's purely got to do with the initial distortion which happened, where you had a very sharp rebound, very sharp increases in price due to inflation. I think that is middling around. So I think 2 quarters out, the strength of the earnings should start getting visible to the levels which we are talking about.
All right, Sailesh, I wanted to particularly ask you about the pharma space. I think I was looking at the Nippon India Pharma Fund. I guess you'd be the one that would be involved in that. And last 1 year hasn't been great, but otherwise the last 3 to 5 years, you'll have outperformed the market, at least this particular fund. What's your view on the pharma space from here on? Many throwing in the towel. In fact, we had, the management of Laurus Labs, and everyone saying those numbers were really weak. The management was fairly cautious. But in fact, post the numbers, the stock rallied 5%. How do you position yourself on pharma from here on?
Interestingly, I think this could well be a very, very important turning point for the pharma sector from a earning recovery point of view. And that is what I think will really matter, because markets in the shorter term do really look at how the near-term earnings are performing. We have seen meaningful price increases in the domestic side. We have seen a reasonable recovery in demand on the domestic branded side. And I think that is what is now going to determine the larger profit growth for Indian pharma companies. Select segments like, API continue to remain weak, but I think it's a function of now last 12, 18 months of weakness, and it should get better from where we stand. But the biggest opportunity for Indian pharma lies in the domestic branded space, because I think the whole opportunity there is way bigger than what we really think, because of the scale which we are in, because of the chronic nature of the problems we are in all those. So I think the pharma space is now seeing a large part of the profits coming from branded, domestic, sustainable business. And I think that will allow for a earning growth of this sector to start getting much better. In fact, earnings have been patchy for the last 4-5 years in the sector, except for the COVID recovery. And I think that allows for a reasonably good recovery in the next few years, given low basis, and also the rising mix of, like I said, the domestic profitable business.
By the way, the markets now turned around very quickly, and we're at the day's high. 18,158 on the Nifty is where we are at. So if you can have the index up, I'll tell you the story. And similar, I think, would be the case for the Nifty Bank as well, which is up 0.45%, and we're at about 43,435. So about 1.5% from new highs on the Nifty Bank, where the day's high, by the way, on both these indices, 92, 93 points now on the Nifty. Two names from the retail space which are jumping. One is Shoppers Stop. It's up 6.5%, 7% right now. And the other is TCNS Brands, which is up 8%. So TCNS Brands was, I think, even last Thursday, Friday, stock did well. But there's Shoppers Stop, which is also now doing very well. Sailesh, is the mutual fund industry going, or for example, you at Nippon, increasing exposure across mid, small caps, etc., in a more aggressive, concerted kind of way? Is there a view really on that part of the market?
Yeah. See, if you had asked this question about 6 months back, where there was not much of an opportunity in terms of valuation gaps, in the last 4-5 months, we have now seen select sets of mid and small caps having corrected, and that has allowed for some opportunity to move around there. In fact, many sectors which were have been tailing off a bit, providing opportunity. So there is clearly some sense of reasonable risk reward coming about in mid and small cap spaces, more so in the small cap side, where the participation has increased. In fact, the valuation differentials, in fact, a lot of small caps and mid caps have underperformed for quite some time. And while the large caps have remained fairly stable, that has provided selective opportunity to participate. Is the valuation so attractive that there is a big differential whether one should choose mid and small cap over large cap? That's not the current situation, though. But I think clearly selective opportunities have emerged in the small and mid cap space in the last 4-5 months now.
Okay, all right, Sailesh, always a pleasure hearing your thoughts. Thanks so much for joining in and, in fact, filling us in with your view on the markets. We're going to track the earnings growth as well as the pharma space. Looks interestingly poised as well. Well